Hey, what's up? Good morning, guys. Jamie here, just doing a quick video. I sold too soon. I bought too early. That is what I want to talk about today. Today is just stocks, stock talk. We had the Fed meeting yesterday. I didn't watch it. I just catch the highlights. I'm going to tell you, I don't listen to all the details. Not saying that it's not good information. I just want to know who won the game, right? Some guys are sports fans. I have some good friends of mine that are, they know all the statistics of the players and the games in the sports world. I'm just like, hey, who won the game? That is usually my take on sports. Who won the game? So I just wanted to know yesterday, did they raise the rate 25, 50, or 75 basis points? I guessed 50 to 75 because of what I've been hearing, but again, it was just a guess. And it did go to 75. And it seems like there was no talk of slowing down. And as a result, the market tanked hard, right? After Jerome Powell did his speech, right? And anyway, so the thing that I'm going to show here is there's several stocks where I should know better, and this is just a humble this is just a humble share of like where maybe you could say, oh yeah, you know what, I've done the same thing. I've sold too early. I sold too soon. I should have waited to buy, that type of thing, based on the information, based on what you believe was going to happen. So when I looked at Adobe and Boeing, and I looked at, what's this other one? Tesla and Netflix. And I'm looking at all the, I'm looking at different stocks, and I'm like, oh, I think this is overbought. I think this is oversold. I think eventually this thing is going to go down. I think this thing is eventually going to go up. So one of the stocks that I sold too early was an options. I had 2 option contracts, puts, where I'm like, this thing is way overbought, and it is going to go down. It is going to go down. It was just a pump because of the earnings for Netflix. Had good earnings, and it went like way up. And I thought, okay, it seems like that's an overreaction to the earnings, from my experience. So I think it's going to come back down. So I bought 2 put contracts. Now I made money on both, but I short-changed myself. I left money on the table because the expiration date for the first one is tomorrow. And when I saw a profit, sometimes when I see a profit, I'm afraid I'm going to lose that profit, because sometimes you hold too long. Maybe I should add that in. I sold too soon. I held too long. I bought too early. If there's that say where it says no one can time the market, but if you have a conviction play where you're like, I know this is what's going to happen. There's got to be a lot of situations and circumstances in your life. It could be at work. It could be with one of your kids. It could be with your spouse. It could be with a coworker. It could be with the weather. Whatever it is, you're like, I know this is what's going to happen. It may not happen. You may not time it just right. But you're like, I know this is how it's going to play out. I can do that with a lot of different situations. And now with the stock market, it doesn't make me an oracle, or have a crystal ball. But I figured Netflix would come back down to a certain level. So when I saw it turn green, I sold. I didn't realize the market was going to tank so hard after Jerome Powell and the Fed meeting, all that stuff was going, because it actually went up, I think, a couple hundred points, 200 or 300 points, and then it just crashed down after that. So if I would have been a little more patient and waited till today, right, or even if I waited later in the day, because I sold those early in the morning, and you know what? And this has to do with timing, because I didn't know what time the meeting was. And when I sold, I was like, oh, because I was busy running around, having meetings, doing errands. I was getting my oldest daughter, she's turning 10. I was getting her some, I just was distracted. And I said, oh, maybe the meeting happened. I'll check it out later. I didn't see anything big. Let me go ahead and, take the profit. Well, that big reaction to, the market reaction was after the meeting. So my timing was wrong. And as a result, I missed out on much bigger profits. I mean, substantially bigger profits. Instead of just making a few $100, I could have made a few $1,000. And that hurt, right? It was like, oh man, I hate leaving. I hate seeing a good play I was in. Like, I was there early. It's like if you've ever waited for tickets for an event, or I remember I remember hearing about kids going to buy sneakers. My nephew used to do that, or a video game or something like that, game system in front of, they go to Walmart or Target or wherever they sell the sneakers, if it was sneakers versus game, and people would wait hours and hours and hours, or overnight, right, to have their spot. They're saying, like, I want to be the first one, so they could get in. Black Friday, another thing. People want to get in and get the deals first. So imagine waiting in that line. Whether you've done, I've never done it, but I know that I've known people that have, where you waited overnight for the ticket, for the game system, for the sneakers. I'm just thinking out loud. Or you waited hours and hours, and then you just gave up your spot. Hey, you know what, guys? You guys go ahead. Everybody go ahead. I'm good. I don't need these things I waited for. You'd feel pretty bad, right? Or if you got distracted, right? Like, let's say you got a call, or you forgot something in your car, and you lose your spot. So that's how I felt. I mean, I'm just trying to share the feeling I felt when I saw, like, my Netflix puts that I was like, I watched them drop from the upper 80s, 80, I think it was 87, 86, 87, all the way down into the 76, 70 something, some price range. I was like, I messed out on a couple thousand just on that, because those were I think I'll put them up there. I had one that was 292. So if it got to 292 or below, then I made money. Then there was another one that was 287.50 or below, and if it went below that, I made money. So every dollar that you go below that, below your strike price, you're making $100 essentially. Now you have to get to a certain number in between the premium to break even, but I definitely missed that. And then the other token, when I showed Adobe the other day, Adobe, was oversold, and I thought, it's going to rebound, it's going to correct at some point. And I had drawn a little arrow, a little thesis of what I thought it was going to do, and it did that. I'm not right. I might be right, maybe 52. I think I'm somewhere in the 52 to 56% range where I get it right. But my ratio is a 2 or 3 to 1. So of the times I'm right, I'm still ahead of the game. I'm winning more than I'm losing, and my win to loss ratio is higher, so that I'm still, putting money in the till, so to speak, in the kitty, as I keep building up, buying powers, that type of thing. So of those stocks that I mentioned, I will, as I've talked here, hopefully I can just drop them in. You can see where I said, hey, I think it's overbought, oversold, and that played out over, days, weeks, or months. So being patient, here's another example of, if you're patient in what you believe is going to happen, it may not happen exactly when you think it's going to happen, but if you're like, I know it's going to happen, then you got to be patient, because what's the alternative? You get out early, you leave money on the table, you get out too soon. And the same token, sometimes you're like, I think, like right now, Tesla, as I do this video, is down at 212 again. It was 237 a few days ago. Now it's 212. And who knows, it'll go lower. Sometimes you think, oh, it's not going to go any lower. It might get back down under 200. So I've been adding more shares, because usually I have my 100 shares in Robinhood. This is not my account where I'm keeping stocks forever, so to speak. Because you have a trading account, is how I do it. Like, so whether you use Webull, Moomoo, Thinkorswim, that's some of the ones. I haven't used Moomoo yet, but like And then I have the Robinhood one, which is my fun account. Those are the ones where I like to be in control and kind of like manipulate my stock, whether I win or lose. And I have 100 shares of Tesla right now that I keep dollar cost averaging my overall shares because I keep flipping those covered calls. And I'll buy an additional 50 shares, 25 shares, something like that, 10 shares, 25. Right now I have another 50, so I have 150 shares that I'll buy just to swing trade, right? Meaning like the 100 shares, I'm just selling covered calls. And then the other up to 50 so far, I've been just bringing down my dollar cost averages. And when they flip up, if it gets back over my cost average basis, then I sell them, whether it's $1.50, a couple bucks. So I can make $50, I can make $500, and then I free up that cash, and then I wait to see what happens, right? Because it's so volatile with the Tesla stocks. Overall, the whole market's pretty volatile, but as far as Tesla goes, I'm watching that. So there's one other stock I'll mention. I may get it wrong because I don't know much about the company. I just saw it I was looking at FinViz, and I look for screeners, and I look to see for companies that are, top losers or, oversold, overbought. And this company called CTLT, I believe it is. I'm going to put it up here if I got it wrong. But either way, it looks like that one is oversold, right? And pretty much. Now, we'll see how that plays out. And this isn't financial advice. I'm not telling you to get in or out of the stock. But I bought 30 shares of that. Not a lot, but just because I thought, hey, if that goes back up to say 50, 60 bucks or 70 bucks, it's right now in the 40s. I'll make a couple $100, $200, $300, $400. So, and that could take some time. And what I'll do is I make all these little plays on these little on these companies based on how they're performing. And I think if these companies rebound or correct, I can make a few $100. Some of them, it's the next day. Once in a while, it's the same day, to tell you the truth. But usually it's like a couple days or a week or two. And sometimes it's longer. But either way, if I'm like, I don't want to get into something just to get into it. I don't want to just do it just to do something any more than I want to buy a piece of property just to be active. And if I see a deal where I'm like, man, this is a good deal, then like I mentioned a lot the other day that came up, which was in Vermont. It seems like a really good deal for what I have to pay for it to where it's located. I mean, there is some other things to do, like clearing the land and putting a septic tank in and a foundation if I was to build a house and talking to contract. There's a lot of work I'd have to do, but the payout for the money is a 10x type of situation where I'm like, well, for what I get for my work, the rolling up the sleeves and doing what I need to do over the course of months and maybe a couple years, I think that could be a nice little payout, right? Like just if I tied up money into a stock or a company or a mutual fund or not a mutual fund or a bond, an I bond, for example, or a REITs or something like that, and I waited a year or two or 3 or 4 or 5, right? Like I might say, oh, at the end of that, I made 20%. I made whatever I made on that time frame. So if I buy that lot, for an example, and I was to invest a little more money into it and time, right? Because there's a process I have to go through between what's going on in the market, which affects everything, and the work that needs to get done and the money I'll have to spend to develop that one lot, right? Which is about 1.78 acres. And but the payout might either be a residual cash flow or it might be just a one-time payout where I just flip it at the end and maybe double or triple my money. So that's how I look at the stocks, in the same aspect as how I kind of look at real estate. And scaling is just, maybe you only have $100 or $1,000. Maybe you have $5,000 or $10,000. Maybe you have $100,000. Some people have millions of dollars, right? So they're able to do bigger things, right? It's just compound. Like when you're at that level, the losses can be greater too, right? I had a friend, and I'll end with this. He had his own hedge fund. It was worth $500 million. And in one bad play with options, he blew up his whole company. hundreds of million. He was in debt over $100 and something million, right? Bankrupt this company, ruined his marriage. I mean, it was devastating, right? So it doesn't matter how big you get, right? You can, I mean, look at some of these other companies, right? And that go bankrupt, hundreds of millions of dollars. So I'm very careful with the little bit I have. I know that you are going to incur some losses, and there is going to be some negative equity at some point, just like the house you might live in. You know, regardless of what you owe, you could be like, oh, my house was just worth this much, and now lately it's gone down 10% or 5%, and it might go down further. But you still hold. You're still like, well, I'm going to keep the property if it makes sense financially, unless you're like, oh, I can't do this. So anyway, that's my thought of the day. That's what I wanted to share. I'll see you guys next video. Have a great day.